Effie, thank you that you were able to join even you had this accident. I'm really happy that you're here, and you already had some contributions, very valuable contributions, and I'm really keen to hear your perspective, that more or less your background, nearly more the whole business life spent in that space. So you definitely have to say something to us. Please start.
Thank you, Rita. Thanks. So you all understand that one of the reasons that I'm here is because I know Rido, because we got to know each other. But it's also because of my Wall Street background and my passion to understand blockchain, not so much as a technology, since I'm not a programmer. I am a quant person, but quant as in modeling. I actually did the PhD in finance with using chaos theory. So, you know, from the stochastic and the deterministic world. So, over from the geekiness, I started my career on Wall Street in the 90s. I was lucky enough to land my first job at Salomon Brothers 7 World Trade Center. As an anecdotal thing, the first day I went to work was the 23rd of February in 1993, and I was in the research department of fixed income structured products. And after 3 hours, the alarm sounded and they said, you have to evacuate the building. I had no idea what had happened. I thought, you know, some smoke or whatever. So we had to go down the stairs, 37 flights. And then I went home. I had no TV. I had just moved and so on. And my mom called from Greece and said, are you okay? That was the first bombing of the World Trade Center. It was this van that, you know, they drove in the World Trade Center and exploding. In any case, so that's how my exciting career started at Salomon Brothers. This is the company that cornered the US Treasury market. This is the company that is famous for, you know, arbitrage trading. This is the place that I met with all the so-called big swinging dicks. That's what we called officially, do not laugh, all the big traders on the arb desk because of the amounts of capital they had at their disposal. So I was nurtured in that environment, and we can talk hours what good and bad things I have taken from that, but definitely an amazing place to be. So today I will be sharing with you all sorts of facts that are related to the crypto world, but I'll also be a little bit cynical about what's going on. And if I didn't have this injury, I would be jumping, you know, switching chairs and being my Wall Street factual personality and being the cynical one. Since I can't do it, I'll do it in another way. I'm holding these papers for the facts, and the cynical part comes out naturally. Later I might share with you my dream to become the first stand-up not comedian, crypto comedian. And there's a lot to be said about that. I need to train on that front. So going into, diving into the facts, Autonomous Next is a US research firm that has a dedicated practice now in fintech and crypto, and they've been reporting that there's about 225 funds right now investing in crypto, an estimated 5 billion. I mean, that number in you know, hedge fund industry is nothing huge, but you know, it's meaningful for the media and the PR and everything. Okay. Now, and the irony is, what is the irony? Poloniex, the crypto exchange, got bought by Circle. And guess who is the major stakeholder in Circle? Goldman Sachs. And now Goldman Sachs, if needed, could really offer to their clients whatever they want without having the risks and the compliances and so on. So back to the facts. You all know that the CME and the CBOE launched Bitcoin futures. What you probably don't know is that they actually need some broker-dealer, a big bulge house on Wall Street, to do the clearing. And actually, when they launched, it was only Goldman Sachs that opted for clearing, and only recently, I think last month, there's a second company, and that's Morgan Stanley. So only two broker-dealers are clearing. And the irony is that on March 16th, 17th, there was a meeting of the finance ministers and the central bankers of the G20 countries, where? In Buenos Aires, in Argentina. And what was on the top of their agenda? Crypto regulation. And what irony is that? In Argentina, the country that has been menaced in terms of their money and is the one that would really, really clearly need a cryptocurrency to be discussing this. Back to the facts. It's been 6,000 years that gold is clearly the asset that is used or is inversely related with financial uncertainty and political uncertainty. We could add to that Bitcoin for the last 5 years. And what is the irony? Today, you all and all the people, the hoi polloi, still believe that bonds are the less risky asset. Okay? And all of you and everybody out there still believes that cryptocurrencies are the most risky assets. What irony is that? I mean, a risky asset, it's volatile and only to the upside. Are we confusing risk and with volatility? Don't we understand uncertainty? I mean, this is a trader's dream, an up-trading asset with volatility. And the fact is, the most capable, talented, and trained traders cannot even touch it, because they're either, working for hedge funds, and don't think that hedge funds can easily switch and jump into cryptocurrency trading, because in the US, for example, most of them are SEC regulated, and they have to report to investors and so on, and definitely forget about, most big bulge firms trading. So, as we speak, there's definitely a thirst, an eagerness to get this asset class, the new asset class, to Wall Street. The numbers that are reported, whether it's the numbers of funds or the billions, is very, very, very low. I actually spoke to a good old buddy of mine that is in charge of risk management at the largest family office in the world. I won't say the name, but it's a man's name. And everybody says and thinks that they've done a lot. But really they've done very little, and it's really private equity, if those family offices are giving 2 or 3 million to a startup in equity, and that's all, that's not nothing, really. So beware of that there's more talk than walk on Wall Street. I want to start with a picture, because I'm not sure that you have it, of how a trading floor is in a Wall Street firm. It's basically an open space. It's arranged by assets, so you have rows of people sitting in front of screens, and it's always arranged by assets. So you'll have, the repo desk, the mortgage-backed desk, and the asset-backed securities desk, and the commodities desk, and so on. And none of that will change, and when will be the day that we'll have a row added with a crypto desk? We will see. The truth is that to go there, we need to develop all sorts of tools, quant tools, models, and so on, so they can operate, because they cannot operate in any other way. And the irony is that already where there are true crypto hedge funds or crypto operations, they're really operating like the old days of Salman Brothers. They are dealing with very few exchanges. It matters to know the color of the market. You drink beers with the brokers, and you basically are manipulating the market and doing over-the-counter trades. Nothing is different. So basically, I am here to report that right now, we're kind of reproducing the old structure of Wall Street in a new asset class. We're looking to find good crypto analysts, like financial analysts, or we're looking to find good crypto economists. There are already traditional research publications and firms, much like fundamental research, that are being produced. And I'll start by sharing some of them, because it's good to know. I think, this book of Chris Burniske and Jack Tatar is a standard book that you can, refer to. You can follow Chris on Twitter. There are always interesting conversations between him and the community. Thomas Lee is another name that you should know, and I'll talk about him a little bit later, from Fundstrat Analytics. And in terms of an economist, this is sort of a standard name that you can choose to follow. And the irony is that we have new gatekeepers in this market like we had in the old one. I forgot the most important thing. If anybody's interested in buying Telegram tokens, I'm in touch with Telegram tokens. They trade in 5 million lots. Come talk to me later. So I'd like to suggest today that we start talking about this asset class that is expected to go on Wall Street and the hedge fund industry and so on. But rather than talking crypto assets, let's really call them digital assets, because this is a class that will be growing, and it will be richer than we know it today. So let me take a pulse of what we have today. A lot of people are using technical analysis, the traditional one, you know, with the moving averages, with the death crosses and the candles and so on, and they're just applying those techniques to these new asset classes blindly. And it's an open question whether there'll be new additions, but basically the technical analysis would be used. Sentiment analysis is used. Thomson Reuters, Rito, if you can start the video, it would be great. Okay. Thomson Reuters actually has just developed a Bitcoin sentiment gauge. It's through behavioral economic research, and they're starting to publish that, and that is for traders. Just watch this video.
What is the most exciting thing that you're seeing in the payment space right now?
What is that?
A great honor to be here. The trends, well, first of all, Oriel, thank you for having me here. This is a great honor to be.
And the other sort of sentiment index that's already out there and used by traders is by Thomas Lee from Fundstrat, and it's called the Bitcoin Misery Index. And this index is really a trading tool. And basically, right now, he's saying that anything below 27, it's an index from 0 to 100. It's a buying opportunity. Based on this index, Thomas Lee is out there in all the media saying that the altcoin bear market is, you know, getting to an end. So it just gives you the idea of these new tools and how they are used. So the sentiment index from Thomson Reuters and the Bitcoin Misery Index from Thomas Lee. And the irony is that the first misery index was developed in the 1960s for President Johnson, and it was looking at the unemployment rate adjusted by inflation and so on. So this is no innovation. So let's go back to serious Wall Street stuff. You need a model to have some type of risk management and sort of way of talking to your investors, or to you know, compliance as to why you put the trades on that you put on. So we're going to be looking at what type of fundamental model has been currently developed, which is very basic, but it is there. But before we do that, I want to talk a little bit about the taxonomy of the existing digital assets. And for investing purposes, it's not useful to think of them as protocols and then apps and so on. It's more useful to think of them as cryptocurrencies, and those are like, you know, Bitcoin and Dash and Zcash and Monero. Then think of the other category of crypto commodities, which is more like Ether, and Golem, and then to think of tokens that are more like consumer-facing applications like Steam and Aragon, and then the famous collectibles, CryptoKitties. I think those four are for now okay. Of course, we'll be expanding both in this category that are the fungible digital assets, and we're going to be going in non-fungible also later with tickets and licenses and so on. But that is a more useful way of looking at them. Now, think of being a trader on Wall Street, and typically you need, as I said, to sit with your quant guys and develop a model. Same in a hedge fund. So you have to answer the questions: what are the parameters or the metrics that I'm going to be following, and transaction volume, number of transactions, mempool, hash rates, all sorts of metrics that are new have to be monitored. So you need more than the one screen. Think of somebody that's developing a Bloomberg type of situation for Wall Street would have to be able to monitor in a user-friendly way those data feeds. And then in terms of the model, you would need basically to look at estimating, like you do in fundamental analysis, the utility value of this digital asset. And you can decompose that in a current utility value, and then future, speculative, expected, if you like, utility value. Then you need to look at the velocity of it, how many times, that is turned over, and then you need to somehow discount it. Okay, so the discounting part is traditional and so on. Let's look a bit, and I'm trying to convey this framework as easily as possible without going into any mathematics here. But you can think of an example in Bitcoin, the current utility. You could look at the number of merchants that are using it for cross-border trade, and the size of the trade. So let's say you have 1,000 merchants, $100,000 worth of trade. You multiply that, and you get sort of an estimate of the utility. Then where it gets interesting is when you try to estimate, like they do in fundamental analysis with earnings, what is the expected utility of this digital asset. And there you can start making hypotheses, like every good modeler and economist, and saying, for example, okay, Bitcoin, how much of the remittance market will it take? Let's say that it will take over 10% of the remittance market. We have an estimate of the remittance market, so the 10% is 500 billion, and then you divide that by the availability of Bitcoin, and you get an estimate of that. And then you go into the gold market, and let's say that Bitcoin replaces the role of gold, again 10%, and you go into your second estimate, and you add these all, and they give you a good estimate of the expected speculative utility of this thing. And you all understand, like with every model, that it's sensitive to these things, but it gives you a valuation and a guideline, and it keeps the mouths closed of all those that say, what was it, that it is, I don't know, vapor. What was the expression that was said before, that it's, that there's nothing to it, no value. So that's how you do that. And then in terms of the velocity, that's quite an interesting metric to monitor. because there you would be looking at the current network value and dividing that by daily transaction volume. And they've called this NVT. Okay, this is like a PE ratio, an analog. You see, we're always trying to figure out something like the stuff that we understand, right? So we want some PE, and we understand the current PE and the future PE and its shortcomings, and the MVT is like that. And now Thomas Lee is coming and saying, okay, let's improve this because it's got shortcomings, and they're smoothing it out with, I think, 14-day averages, and they're using actually this MVT to talk about where we are at in terms of valuation. So this is Thomas Lee's plot of Bitcoin's MVT, and they use that like you use a PE and look at the history and see if you're overvalued or undervalued, and so on. And you can look at doing that for all sorts of coins. Here you see Bitcoin, Bitcoin Cash, Litecoin, and Ether. So these are the kind of models that we're starting to see. We're seeing a lot of, as I said, technical publications or fundamental type of publications. I'm seeing a lot of that as they often come to us at Daily Fintech, thinking that we will promote their work and so on, which is not really what we do. The last guy that I want to mention to you is my friend Willy Woo.
It's not on left.
Yes, it is. Just make it big. Willy Woo. So if you don't know Willy Woo, get to know him, because he's the guy that talks about the MVT, and he says that we are stuck in a range of 9 to 12,000 on Bitcoin, but it's interesting to see how these tools are used. The irony is that all the finance industry is really looking at this as another opportunistic trade. So when you are funding startups, think of whether you're funding and facilitating Wall Street in playing the game and creating wealth, changing the fact that right now about 1,000 people hold 40% of the crypto wealth, and it's not on Wall Street, of course, but we're just going to change that distribution of wealth. That's not what we want to do. What I'm trying to say to you here is that from a trading perspective, there is no benefit to the movement, the essence of the movement of blockchain, which is multidimensional, but it's basically, for me, as it crystallizes, it's about being able to make decisions in a different way, since the way that we're making decisions now, which is very centralized, is not working, and we're not solving the big problems that we have. Poverty, distribution of wealth, inequality, education, climate, and so on. So that's where the essence is. On the way, of course, there'll be a lot of wealth created. So this is what I want to leave you with, and I hope that the satirical aspect of it, you're not taking it as only negative. I personally am a big proponent that it was wrong to make Wall Street the black sheep after the crisis of 2008. It was unjust, not wrong. It was unjust because if we picked the first most determining factors, 5 first factors to the crisis, definitely Wall Street wasn't number 1 nor number 2. But we can talk about that on another side. So I want to close with the fact that I hope that we don't create the Wall Street greed that you all think was there in the crypto world, and I hope that we don't generate gatekeepers that are actually worse than what we knew on Wall Street in the crypto world, and unfortunately I'm seeing some of those signs. So I'm going to end here, and I'm happy to take any questions.
Hey, thank you very much. Fantastic. The micro doesn't work, so the irony is I have to take this one. Are there questions? Please, come on. Not too many, because we have then the talk battle. You were the first, Tom, but ladies first. Okay?
I was going to pass this to Jane, but Effie, I really enjoyed that, and it was very subtle. I really liked the cynicism coming through.
Please, close.
So I really enjoyed that. It was really, but informative, but also humorous, but very well put across, and with a very powerful message at the end. So thank you for that.
Yeah.
Effie, could I be your agent for your new comedic career?
That's great. Thank you very much. Are there other comments? Yeah.
Hello. Oh, hear me. Like, if 40%, if there is such a concentration on the crypto side, and it's not belonging to Wall Street, what's the play on the big banks like Goldman Sachs, Morgan Stanley, and what Wall Street wants to do? Like, if they don't own and they don't control the crypto, the Bitcoin, Ethereum, and so on, it's investors. So what do you think is their play in it? What they want to do with crypto? Or if you were in their shoes, like, what would you do? Like, would you try to get a share of it and then to create a wealth, or would you like to destroy it? Like, what would be your game plan if you were in their shoes?
Well, there's two clear and normal things that one should expect. One is as an asset to be traded. Of course, they would want to make money. If they can find a way to create a fee business for their clients, they would love that, and I don't blame them, because it's the best thing to do, to have fee businesses like custody business. Oh, fantastic. You know, no risk, the regulators and so on. And then, from a philosophical perspective, they are starting to understand that this is a threat. And of course, they're going to do whatever it takes, what exact form it will take. They will use everything. I mean, sometimes it will be attacks, sometimes it will be defense, sometimes I'll sleep with you, and so on, you know?
Okay, thank you very much. We need to... Yeah. You want another question? Answer? Okay, sure. Okay, Tom.
Yeah, hi Effie, thanks a lot. That was really cool. I just wanted to ask you if by any chance you had any more data or could go more in depth on these 220 odd hedge funds and all their dry powder. Do we know if they're investing already, if they're sitting it out right now? If because that's $5 billion is a fair amount of money to come into. It's not a lot, but it's to come into this space, right?
Yeah, well, the data is out there. I can point you to the reference that has quoted this. I cannot guarantee how reliable it is. because a lot of these funds, as you pointed correctly, new ones, are set up, but they haven't really, and even Chris Borniske that has set up a VC and so on, I don't think that they've done a lot of things, because as always it just takes much longer to get all the setup done. One good example of a traditional hedge fund in California, Passport Capital, and you can check them out, they closed down and gave the money back to their investors, and now they are relaunching in crypto space, and I know that they are really doing things.
Okay, cool. Actually, if I could just add one more thing, also a question, because I'm not a quant by any means like you are, but I've done some research in trying to get data on crypto, and it seems like the numbers can be so here and there. I tried to get a simple number on ICOs in 2017. Everyone says 5 billion, but I've seen 3.5 billion, I've seen 4, and it seems like the numbers can be really all over the place.
Exact. So
that's just life.
So we are all, how can I say? It's media business, really. It's media business. It's like we heard and then we believe. So, that's where we are.
Okay, that's where we are. Thank you very much for your questions. Thank you, Effie, for your fantastic performance.